If you've been thinking of investing in real estate, we've got great news for you. Today, we're going to show you step by step how you can invest in properties to finally achieve financial freedom. In this video, we'll talk about the 3 basic investment pillars that you need to know to start your real estate investing journey. So, grab a pen, take some notes, and let's get into it. Let's break it down. There are 3 questions we need to ask ourselves when investing in real estate. Firstly, how much can you afford to invest? Secondly, why are you investing? And finally, how can you find the best property investment deals that work for you and not against you? Let's start with working out how much you can afford to invest. As a rule of thumb, usually you would qualify for a home loan that has a bond repayment that is a third of your income. Then, based on what that number is, you can work out the total value of the property that you can afford to invest in by dividing it by 0.01, since your monthly bond repayment is usually around 1% of the total property value. So let's say, for example, you and your spouse earn a combined salary of 30,000 Rand per month. That means that you would then qualify for and afford a 10,000 Rand monthly bond repayment. So that's 10,000 Rand per month that you can pay on your home loan. And if that's the case, then it means you can afford to buy a property worth 1 million Rand. Moving on to the next pillar, you need to know exactly why you want to invest in real estate. Whatever your reason, you need to give yourself that unique and attainable cause so that you can align your goals with your dreams. When it comes to investing in property, there are 2 strategies that you can deploy. Number 1, you can invest in a property that has high capital growth. Or number 2, you can invest in a property that has high rental yield. So what's the difference? Capital growth refers to the overall growth your property will experience on a yearly basis, depending on that property's location. So for example, if you're investing in a property valued at 1 million Rand in an area with 10% capital growth, this means that each year your property's value will go up by 100,000 Rand. In this case, the quicker you pay off your bond, the sooner you can reap the rewards of your capital growth. Rental yield refers to how much income your property will generate you on rent. If you're looking for a property that has a high rental yield, you're ultimately looking for a property that's going to give you profit every month on your rental income after expenses are paid. It's important to know this because most of the time, when a property has a high capital growth, the rental yield is lower, and vice versa. So you need to ask yourself, why are you investing in property? Is it for the long run return on investment? Because then, in that case, you want to invest in a property that has high capital growth. Or are you investing in property to achieve more disposable income? Because then, in that case, you want to invest in a property with a high rental yield. For the example of this exercise, let's say you want to buy a property that gives you a high yield on rental income. Next, let's talk about choosing the right asset for you to invest in. You'll always have options when investing in property. It's up to you to choose a property that allows you to make passive income on your own terms. Let's look at 2 options and which would be the best choice. Option 1. You find a 3-bedroom house that's in a secured estate. It's selling for 500,000 Rand with a monthly rental of 5,500 Rand and a regular expenses of 300 Rand per month, which includes your tax and levy. Furthermore, your bond repayment on this home is 4,900 Rand per month. And growth in this area is 10% a year. Option 2. You find a 2-bedroom apartment that's also in a secured estate and is selling for 500,000 Rand. But your monthly rental is only 4,500 Rand per month. And your regular expenses are 300 Rand per month, which includes your tax and levy. Your bond repayment on this home is 4,900 Rand per month. And growth in this area is also 10% a year. So which option will you choose? Option 1, right? Since you're earning 5,500 Rand a month from rental income, and your total expenses are only 5,200 Rand, which is a combination of your bond repayments of 4,900 Rand, plus your expenses on tax and levy of 300 Rand, you'll be able to enjoy a monthly cash flow of 300 Rand. Whereas with option 2, since your rental income is only 4,500 Rand and your expenses are 5,200 Rand, you'll be paying an additional 700 Rand each month into paying off your bond. Now that you've chosen the right deal, here's what you can expect for your rental growth over the next 5 years. Your rental growth after year 1 will be around 6,050 Rand per month, 6,665 Rand after year 2, 7,320 after year 3, 8,052 Rand after year 4, and 8,857 Rand after year 5. Thanks to a 10% annual capital growth, that same property will be worth over 805,000 Rand after 5 years. This means that your investment would have increased by 305,000 Rand. You can then choose to sell it or continue increasing your monthly rentals until you've paid off the home loan. With that increase in the value of your home, you can refinance the property and purchase a second or third property. And if you repeat the process every 2 to 3 years, you can build a solid property portfolio and achieve financial freedom on your own terms. With PropInvest, you can make all that a reality without needing any experience in real estate investing. We do all the heavy lifting for you, so that all you have to focus on is growing your portfolio. So if you'd like to find out more about how PropInvest can help you make smart property investments, then secure your free no obligation property investment consultation today. We can't wait to meet you.